AI stocks do keep rising, but our next guest says that he's waiting to get in on the hype. Joining us right now is Mitchell Green. He is founding partner at Lead Edge Capital and an investor in Ant, Alibaba, ByteDance, and Uber, among many others. And Mitchell, thanks for coming in today.
Thanks so much for having me.
So you think these valuations are far too high at this point?
I think people are back to 20 and 21 crazy land, and this might be a little 99, 2000 world. A really famous early stage investor told me recently, when I asked him, about AI, what are your thoughts? He said, in 1997 or 1998, you could build a website. It would cost you $50 million, and you'd have to go to Sun Microsystems to buy chips. Fast forward today, today you take $25 and go to GoDaddy with your credit card. They believe the same sort of thing is going to happen. AI will revolutionize the world. It's going to take, it's going to completely change industries, create new jobs, probably, radically disrupt entry-level white-collar jobs. However, it's going to take a lot longer than people think.
Let me push back just a little on the comparison to 1999, because I remember that too. The difference at that point, though, was none of those companies were making any profits. They had revenue that was coming in. Nobody had any profits. This time around, you can look at a lot of companies that are making some pretty huge profits that justify the earnings. NVIDIA, you can look at.
NVIDIA.
Okay, what about what Amazon's able to do with this? What about what Microsoft's able to do with this? And what about the companies that I'm talking to when they automatically put AI in and they can cut their expenses drastically immediately out of the box?
So what's really interesting, and I think causing this weird dynamic in the markets, is a huge amount of the value right now is flowing to NVIDIA and the giant data center guys.
Yeah.
Those guys are printing money off this. And you have all these other companies, whether it's XAI, Elon Musk, one of the most famous entrepreneurs ever, but raising a startup at $6 billion, Anthropic, OpenAI, none of these companies are making money. But everybody talks about how all these companies, we look at all these smaller AI companies, and a lot of vertical application software related to them.
I'm thinking like customer service.
Yeah, it's like customer service or communication software. Yeah. And if you actually start to dig in and look at the gross retention data, so it's like how many customers are coming back every day, you see a lot of revenue growth, but the gross retention is not very good. It would look nothing like a Snowflake or a Datadog or a Viva, which are world-class SaaS companies with really high gross retention, or Microsoft's data center business, which nobody ever leaves, or Amazon, AWS, which implies to us that lots of customers are trying this stuff, but a lot of it is probably more hype than actual product right now. So, for instance, there's all these companies that pitch in the investing world that we have the software to help you analyze and make better investment decisions. So at Lead Edge, I don't know, we've probably made 100 investments over the last 15 years and probably looked at tens of thousands of companies, and we have them all direct to one folder in Dropbox, through different hierarchy. I say to my team constantly, can you please give me software that I can ask questions of to be like, hey, we invested in this in Bizarre Voice in 2007. What is it most like? What were the companies that were biggest risks? When we're looking at this new company, what risks look like stuff we've looked like in the past? I was out last night for dinner with a large investor who buys stakes in other GPs.
Yeah.
I was asking them, do you use software to analyze, look at one fund today and look at all the old history and try to compare it to other successes? He said, we've had companies come in our office that have this big website all set up, and you start to probe into them, and they're like, no, if you become a customer, we'll help you build the software. And so we think a lot of this stuff does not exist yet.
Actually just search stuff, and it looks like a lot of bells and whistles that can't be until you put a lot of money into it.
Although I do think it is coming. Well, one area we do think is quite interesting is around tech-enabled services.
Okay.
Think about the next generation Deloitte or helping E&Y's consulting or McKinsey, and using AI to make the analysts and associates there much more efficient at their jobs.
Those are software companies that are going to be selling products to them.
Not
them creating their own products.
I think it's a combination. Of both. It's a combination of both. Yeah. So we think we have seen some interesting companies around tech, AI related tech services businesses that are really body shops, but they're using AI and technology to have much higher margins.
So you have heard from a lot of these companies, and every single time you're not impressed at this point, or?
Having met a bunch of them as potential vendors, we have been pretty underwhelmed with what we've seen so far. Could be another great example. Our LP base is really unique, and I think you guys know we have a lot of wealthy individuals that are investors with us. We host events. We have like dinners. So we'll have 200 people come to dinner in New York. We'll have 60 people come to dinner in Austin. And we have seated dinners. We know how much these people have invested. We know what their hobbies are. We have 10 years of data for historical dinners. So I said to my team, why don't we build software to use AI to automatically build seating charts? So it could be a pretty easy thing to do. Do you think it exists yet? No, of course not.
Really?
We see it in the retention data of these companies. If the software was as good as everybody said it was, the retention would be really, really high.
Okay, so last year, companies, and I'm talking public companies now, were applauded when they talked about how much they were investing and spending on AI. It feels like that has shifted a little bit this year, and there's a little more pushback from investors that they want to know how you kind of rein that in a little more. Just like we went through a few years ago when investors pushed back on Meta and other companies that were investing tons and tons in the metaverse.
I think that's right. Look, but in the CapEx numbers that people I think were throwing out in some of these last earnings calls over the last couple of quarters has just been like the amount of money that Facebook and Amazon, Meta, and NVIDIA are spending. These numbers are gigantic.